For more on the wild week that happened, I'm joined by John Tamny, Director of Center of Economic Freedom at Freedomworks and editor of Real Clear Markets. Good to see you, John. Thank you and welcome to the show. Let me start with what's happening in the UK, because I've heard from experts that it did have an impact on the markets and some who said that maybe it didn't.
Well, I think the very idea is a bit overstated, or at least the reasons they're giving for the reaction in England. Let's not forget that their markets were correcting at the same time that global markets were. And the idea that the proposal of a tax cut, that everyone knew that proposal was coming, was going to be the source of the market's retreat, never much made sense. It strikes me that the bigger story here that very few people are talking about is that there are very real threats or talks of some sort of tactical nuclear strike from Russia and Ukraine. And I think that's the bigger factor weighing on the market than something that was known all along that was coming. Of course, a new Tory prime minister was going to propose a tax cut.
Right, and all of those threats, the supply chain disruptions, the increase in oil prices, that's all impacted, obviously, inflation to consumers for the vast majority of the world. And central banks are fighting this by raising rates and slowing sort of the growth rate of everything. And I wonder, from your opinion, are we fighting inflation the right way? Is this the best way to do this?
No, of course not. It's the absolute wrong way. What does raising rates have to do with inflation? If you want to arrest inflation, you stabilize the currency. That would be the pound in Britain, that would be the dollar in the US. Inflation is a currency phenomenon. And so to pretend that a central bank projecting its influence through banks that increasingly are very minimal in terms of total global credit is the ultimate non sequitur. Furthermore, think of the thought process that goes into this. The goal is to slow the economy and put people out of work and destroy businesses as a way to fight inflation. Have you ever heard of something more backwards? The simple truth is economic growth is all about investment driving down the price of everything, yet they're trying to destroy the economy to fight inflation. I've never heard of something more backwards. It doesn't work.
I have a bad feeling that you may have been listening in to when I have drinks with other people and talk about this subject, because it's something that I've talked about, is that if the lack of goods and supplies is causing inflation, what we need to do is we need to create more supply to balance out the supply and demand issue. And if you're raising rates, no company in their right mind is going to go in and invest in new factories and build more things. And so it's this terrible circle that goes down, that we're going to have less output, which the demand, arguably, yes, you could destroy demand, but ultimately this is a huge negative for the entire global outlook. And that's why we see the IMF and the World Bank giving this bleak outlook. But if they're doing it wrong, the IMF and World Bank aren't pushing back on these rate hikes.
No, they're not, because what have the IMF and World Bank ever gotten anything right? The IMF's solution for decades has been, if a country economy is weak, devalue the currency. Well, that is inflation, but that is the ultimate way to destroy an economy. Investors drive economic growth, and so if your goal is to devalue the currency, you're driving away the very investment that could get your economy back on track. And so the fact that the IMF supports this tells you all that you need to know about it being a bad idea. And let's not forget what got us here in the first place. The global economy was shut down to varying degrees. And the miracle in February of 2020 was this remarkable global symmetry among billions of workers working together to produce items for sale. You think after you shut that down that it's going to be difficult to get back to the prices that prevailed beforehand? The fact that prices are higher today is a statement of the obvious. My only quibble with you is that's not inflation. Command and control is not inflation. It's command and control. And we are suffering the bitter fruits of lockdowns to this day.
Okay. That said, where do we go from here, John? I mean, what advice are you giving to, whether it's London or Washington, D.C.? What do you think policymakers should do?
Well, my advice to Liz Truss is to double down on the tax cuts. If you want economic growth, reduce the penalty placed on work, and most of all, reduce the penalty placed on work for your richest citizens. Rich people, by definition, have the most money to invest, which is what will get your economy moving again. In the United States, it's very simple. A strong dollar is not our problem. The dollar was strong in the 80s and 90s, and the U.S. economy boomed. That was when China attached its currency to the dollar and saw its economy take off. So your answer isn't a strong or weak dollar. It's just a stable dollar that the world can trust and that other currencies around the world can measure themselves against. What we have, the problem we have right now is floating currencies, not currency stability.
I absolutely love the debate that we're having here. For us regular folks who are looking at the end of the year, help us better understand where we will be at the end of Q4 and possibly in Q1, assuming that central banks don't shift their policy the way it is right now.
Well, I think you're gradually going to see the supply chains, this remarkable, genius global symmetry that had existed before these needless lockdowns, slowly reacquaint itself, slowly reassert itself. So you're going to see prices come down. High prices, by definition, are transitory. But it's got to be stressed. That won't be deflation. That won't be an arrest of inflation. If you want to fight inflation, it's a currency phenomenon. It's about currency price stability. All this other stuff is a non sequitur. And let's please, please, please keep stressing the basic truth that one of the most backwards, dangerous, sickest ideas out there right now is that people must lose their jobs and businesses must be destroyed to beat inflation. I've never heard a more ridiculous and anti-reasonable thought process, and it's infecting the global economy right now.